Welcome to Commodities, and look, there's not a lot of action anywhere except for sugar. So I'll just sort of whip through things, and we'll spend a bit more time on the sugar. But yeah, look, not a lot happening. The US dollar is pushing higher through 80. It will correct. Let's have a look at that first, shall we? Just so we've got a bit of a picture here. So from this low here, we've basically got 5 waves up through here that are not quite finished. Basically 1, 2, 3, 4, and then up for 5, which is 1, 2, 3, 4. Something in here anyway, but it'll push up higher and then it'll have a correction back in here and then push higher again. So there is strength in the US dollar, and you know that's affecting the commodities as such. So anyway, starting with gold. Look, as we can see here, there's a consolidation at the 1300 here, closest largest number, and you know it's looking more like resistance than it is support, isn't it? And the other point is that that's this little pattern in here is in 3 waves, so it makes it corrective. Well, it would make it corrective if it took this low out through here. Otherwise it could be up for 1, back for 2, then up for 1 of a smaller degree, but I don't think that's the case. But it would be good to have that low there taken out. Look, anyway, it's more resistance than support. So just drilling in here, the particular pattern that we're looking at across here is we're looking at it in terms of a triangle pattern. So look, the other point here is that this move up through here that we're expecting was basically the 50-60% retracement level of this previous move down through to here. And it's possible that this C of E of B is actually this one in here, and we'll look at that. But as it stands, we're looking for this morning I was looking for a move back to 1293 where it is now, and then a move higher. But let's just drill into that. So. Just on the 1 hour chart here, there's a few lines all over the place here just to point out a bit of sort of resistance really. This one through here, which is pretty obvious really in terms of part of the 1300 area here. This little move up through here is actually to the 1298 is the 61.8 retracement level of this move down through here. So we are seeing, this from this high down to here, this was the 61.8 retracement level here at 1300. This was the 61.8. This is the 61.8. So, it's sort of working itself into diminishing itself into a triangle in its own way, really. So I think that's sort of worth noting. The idea here, generally speaking, was that it has a bearish bias. But when do we short? Well, I thought the safest bet would be when the 1290 becomes the retested resistance. So that's something that we can look at. But as it stands, we're looking for a projection up into these areas through here as an A and a B and a C wave up through to here. But we do have the A, the B, and the C already built in here. It's just that it's a skinny little sucker compared to this, sort of humongous move down here, so to speak. But it does go back to the 61.8. It does have 3 waves. So, and also too, supporting further downside, this little move from here down to here can be counted as 5 waves. So if we have a look at that here, I'll just label it here in terms of the 1, the 2, 5 waves for the 3rd wave here, the 4th and the 5th, and then it pulls back up 61.8%. But this little move up here also can be counted as 5 waves as well, and the 61.8 was basically back at the 1293. So, I kind of got to let it sort of, I'll just show you this little structure in here as such here. So we've got the 1, the 2, strong 3rd wave here, the 4th and the 5th here. So I was looking for an A wave, a B wave, and a C wave here. So probably, if you look at 1 minute chart, you probably be able to work out the 5 waves in here. And coming back to, so I guess like when you're working with group 1 here, 1, 2, and 3, if the 92, so 1292, the 2 basically the pivot within group 1, I normally find if that becomes the resistance, then you know that the market's going to be pulled to the closest largest number, which would be the 90 here. But if that's the case, then we just need to, look, as it stands, we'll be pushing up from here, but If it was going to push down, then we need to look at it like this as a short position. We'd have to look at this as wave 1, wave 2, wave 3 into here somewhere, wave 4 and wave 5 here, and then we'd see an A and a B and a C bounce, maybe back to supply levels here, and then working down through here. So just got to keep that sort of in mind. So even though I said 1290 as a retested resistance, it wouldn't really happen until here. It's kind of good to understand that if there's a clean 5-wave structure from that high here down to here, and then there's 3 waves here, then the 92 becomes the retested. Well, then that would be the correct timing to enter into this. But as it stands, this market can push up from here based on those 5 waves. But as I mentioned, it's a reasonable count on these 5 waves here. I know this could be counted corrective as well, and it kind of does look a bit corrective. It's, I don't know, it's just a little bit dodgy. But the main point is that the market is working itself into a corner. It keeps working back to the 61.8 all the time. This one, this one, this one, this one, back into here again, into supply up to here. So it's sort of, draw your own little triangle pattern in here and work it. So there is a trade coming out of this, and we are getting close to it. So I think that's interesting in itself. The silver market's got slightly different count. We were looking at this as wave 1, 2, and 3 up here, wave 4, and we're looking for wave 5 up into this area through here. So not really interested in going long on silver as such either, but let's just see it play out. Nothing sort of cooking here. The base metals doing what we expect it to do. The main levels here are, 300 is trading levels, the major level. Then the minor levels are 10, 20, and 30. The next important levels besides those is the midpoint, which is 5, so 305, 315, 325, and then breaks down into 8. So strongest numbers are 1, 5, then 8. However, here we were looking for a reaction at the midpoint here, and so we could look at it in terms of the classic trading levels pattern, where we have the arrival, the reaction, finding support from the reaction, then pushing up for the first high above the level, and then the A, the B, and the C here, and then developing support on here, and then pushing up through to here. So understanding that's important because we've got commodities, and we normally find that Wednesday and Thursdays are the sort of the swing days that sort of swing down and take out your stops, mainly because they've got lots of most of the news is coming out on those days, not always, but generally speaking. So that pattern would sort of line up with Wednesday being basically a V-shaped day, down in the morning, up in the afternoon for Australia anyway, and Thursday being the bear market in a bullish weekly cycle. So it kind of all fits in there, but understanding this is important. All good. The oil market is still pushing higher off the 100 here. The 50-60% retracement level is at 102. From this little move here, it does appear we've got 1, 2, 3, 4, and 5 to move up through here. Support on top of 30 will get you to the midpoint at 50, and then support on 50 will get you to the 80 here if you're looking to sort of scalp on the way up if you've got nothing to do. This is on the daily. This move up through here is becoming overbought rapidly, so I don't really see it going past the supply levels at 102 here. So let's just see how that develops. But it's difficult to it's difficult to short it up at this point here as well, because we're above this number here, and I don't always. You got to line all the sort of eggs up, really. You need to get all the little elements on your side to give you that sort of probability, and trading on the wrong side of the closest largest number is not very helpful. And sure, you can get away with it, but in the long run, it doesn't really. A loss is okay, but it just takes so long to recover from them. It's time. They're just annoying and time consuming, and you can eliminate them by, having simple rules of being on the right side of the closest largest number. And the market is there for a particular reason, and you need to, work with what's actually happening and not what we think sometimes. The gas market is bearish, and we're looking down at 420, but we can expect a bounce off the 430 here back to the 38.2 retracement level, closer back to the sort of 445, 448 sort of area here. Once you've got the bounce off here, the daily is deeply oversold, but the momentum is still to the downside as well. So let's just see how that bounce recovers on the overbought situation as it does rally. The soybean market, look, until the 1500 becomes the support, then we just need to allow this correction to, across the 1500 to continue unfolding. It's all, so nothing cooking here. And the same for the wheat market. I've had a little bounce off the 700 here, met supply, and it's likely to move down further. So yeah, we'll just see how it pans out through here. But I've got a feeling it'll find some sort of support in this region here and eventually climb back on the 700. But we'll just keep our stops out of the way for the time being on this one. The corn market. Nothing doing here as well. I know this is all corrective across the 500. Just don't have an impulse wave to the upside to move into this just yet. But it's just always good to watch, because I understand, people look at corrections like this and that's what they think they're going to get, but for me, the bigger and uglier the correction, the stronger the next trend is going to be. So you always get the opposite of what you're looking at. So, and the other thing too is corrections can, as they move sideways, they can wear you out and you lose, focus and attention. And that's the time, that the uglier they are, the more you need to pay attention. So, anyway, this is actually all good. We don't have a setup yet. That's all. The same with the coffee market as well. Still observing the first move down, and expected to bounce off the 180 and the 172 of the old supports over here, and we just need to allow it to do that. We look at commodities for longer term trends, and it's not here yet. As simple as that. The sugar market is interesting though, because it's popped up and triggered in the 1730 and 1750 orders, and there'll be some sort of consolidation at the group 2, which will be the 1765, 1772 and 1780, and then a push up to the 1800. Now with this market here, if we're correct, then triangles normally don't. What they say is that you take the distance of this thing here and pop it over here, and that's what you'd be looking at here, as a target thing. But I think that we can look at it in a different way as well. We can look at it. Say Richard Wyckoff would look at this here in terms of accumulation here, and look at it. The distance across here would be the distance up here. But I always sort of see it too that this is the level that we'd be looking for up here, the $20 up here. That's what we're sort of gunning for, and we just need to understand the wave structure as it moves up through here. Commodities tend to extend in fifth waves rather than first and thirds, but we have got an extension in the third here. But still, the fifth wave can extend past this one here as well. But we'll just focus on the wave count as it unfolds here, and currently we're looking for wave 1 up through to here. Yes, this move up through here, if I can just draw this out, and we will look at it in more detail, but basically we're looking for the 1, the 2, strong third wave up here. There'll be a fourth wave here and a fifth wave here somewhere in there. Then there'll be an A and a B and a C that could come back down to the 50-60% retracement level and then move off. I don't think it will actually come to this far down. I think it will be more like here. Okay, our idea is to understand this particular structure through here and then look for buying opportunities. So because we've got positions at 1730 and 1750, and we'll get some at this level here as well, and this level, and above that as well. I'll talk about that in a moment. But we need to keep the stops out of the way. So the stops are going to stay at 1726. So whatever positions that you get in here, keep them light enough to accommodate the 1726 stop. And we'll also be looking, if this does pull back down here, we'll be looking to add into this situation here. And then we'll also add more bets coming back up through this way. And our main betting will be in the third wave coming up here, and it will be above the 1800 here. So we'll be looking at, we'll be looking to, I'll just start back here again. So we've got, we were calling this low in here yesterday or the day before, and we're looking at wave 1, wave 2. I think we've got 1, 2, 3, 4, and 5 in here for the third wave. I think the third wave is just about done. Yes, it can go a bit higher, but looking for a correction across here is wave 4, and then wave 5 up close to the 1800 area through here because, then the A, the B, and the C. So even if you've got positions in this space here, we will be adding more if it pulls back this far here. But I expect the 1772 to play a stronger part once that correction unfolds, as a good support. And then these numbers here. So once after whatever happens here, we're looking for some type of correction at 1800 here. Okay, $18. After we get a three-wave swing, and then if we get support on the 1800, we need to buy on that. We need to get on 10, 20, and 30. And if we get support on 30, then we know that we're going to be going to the 50. So we'll be looking to add on top of the 50 as well. And I'll have a look at the wave structure at that point. We may continue to add here as well, but it's good to give it a bit of space. So we might wait until the $19 becomes the support, so we've got a bit more up our sleeve. But I want to see in the bigger picture if we get, just get here. I'll just go back to the daily chart here. Basically what I'm looking for here, well, hoping, what I was hoping for is to see a five-wave structure. So up for 1 here, back for 2 here, up for 3 here, back for 4 here, and up for 5 here. That's what I was looking for. Now, I don't know if that's going to eventuate or we're going to be sort of struck off here somewhere. But let's just see if this is 5 waves up here and then 3 waves back, and then this one here starts, then I'll know where we are. But our objective is to build into this third wave here and then pretty much ride the rest of it out through here. But we'll add on 19 if we can. Alrighty, that's that. The orange juice. Look, I'm ever sort of hopeful that we'll push higher from here, but I just don't like this particular 3-wave structure here, and there looks like a little 5-wave structure in here. So we're looking for a move to 162 and then further down through here. But I know in the bigger picture we're looking for a move higher. So look, basically the way that I've approached it is that if the 163 becomes the support, get one position here, and then we'll look to add on top of the 65 as well and build into group 2 here, which will be the 65, 72 and the 80, but we'll build in on the 68 and a few other numbers in here. Look, you could build in on 162 support, okay? That's a possibility, but I'll leave you to decide that. So if you see a nice tested support on 162, then that's fine. I mean, the price is 162 is 1.618 basically, so it's kind of a pivotal point within all of this. We use price as ratio, and the 61.8 is is a part of all of that. So that 162 is just rounding that off a little bit. So it's important. All right, that's it. All right, cheers.